Let's talk a little bit about the agenda that we have prepared for our audience today. So first, we'll talk about the macroeconomic environment in Latin America, placing it within the global context. We are facing a lot of challenges in the environment from a global perspective, obviously impacting the industry outlook. On the second section, we will focus on the core industry views, looking at which industries are looking to come out as winners within the next 18 months and which industries may lag behind. And then we will engage into a brief discussion of potential regulatory developments across the region that will impact the B2B demand and performance. Finally, we will review the position of SMEs across the region, which find themselves in the era of higher credit costs. And then we will conclude our session. As a reminder, you can send us questions on the Q&A box, and please feel free to participate and chime in. With that, let me pass the word over to Mariana.
Wonderful. Thank you so much, Brenda. So let me go ahead and get started by sharing with you what our view is on some of the global and regional trends that are going to really be shaping that B2B demand across Latin America over the next 18 months. So just to start off with our global view, sort of very high level, what we're expecting into 2024 is that slowing inflation and the rate cuts that we're expecting to come early next year are likely to improve the global macroeconomic outlook. We'll likely see growth tick up, not significantly on average, but overall, I think we'll see a lot of markets have slightly better outlooks than what we were seeing this year. Now, that said, I think there's definitely some nuances to how that global story is going to play out. So I wanted to show you this slide here that sort of breaks down quarter by quarter what our expectations are for some of the top markets and regions that are really shaping the global story. So if you look here as to what our expectations are for 2023, we see a bit more of a mixed bag, right? With China perhaps having somewhat stronger performance than what we're seeing in Western Europe and the US. And then, of course, the core implication there being that the U.S. is really going to see its economic activity level sort of bottom out throughout the end of this year and into Q1 2024. So that marks sort of some of the most challenging periods that we'll see from a global growth standpoint. As we enter 2024, though, and particularly the second half of the year, we are expecting an improvement across the board. We'll see strong and accelerating activity in the US and China and Western Europe. And so that's where the story starts to get a little bit brighter. And I think these dynamics are certainly going to impact how Latin America is able to continue to recover from a slightly more challenging year in 2023. This, of course, story of global growth is going to impact certain industries differently. I'm going to give you just a brief overview of what we're seeing on an industry by industry basis at a global level before we look at these industries at a LATAM level and really take into account some of the more the core domestic dynamics. So just to summarize what we're seeing in terms of just global trends, we continue to see consumer luxuries present one of the strongest outlooks, right, over the next 18 months. And then the services sector, that's a core part of the story and where we see a lot of opportunity still, services and then tourism and hospitality, right? It's more of a mixed bag for other sectors like fast-moving consumer goods, healthcare, manufacturing, right? There's going to be some trends that help accelerate the activity in these sectors, particularly the slowdown in interest rates, but we're still not seeing a completely positive outlook. And then real estate and construction continues to be the segment that sort of lags behind, and that's something that we see consistently across LATAM as well. So let's switch gears and get into what we're seeing in the region. So I wanted to show you where LATAM stands relative to other emerging market regions as we enter 2024. So what we're seeing here, unfortunately, is that even though LATAM outperformed over other markets in 2022, conditions get a little bit more challenging in 2023 and 2024, even though certainly some core indicators are going to help these challenges ease, particularly throughout the second half of 2024. LATAM sort of reverting back to the period that we were seeing prior to the pandemic, where really the growth level across the region lagged what we're seeing in other emerging market regions, right? We're seeing LATAM grow as a whole 1.7% this year, 1.8% next year. So that's below the 3.3% global average and below emerging Asia, China, Middle East and North Africa, all of these other regions that can often compete with LATAM in terms of attracting resources from corporate, right? That story varies across markets, and that's where the outlook gets a little bit brighter, maybe. We do see most of the markets across LATAM not showing a significant variation in growth relative to what they were seeing this year. Mexico, Brazil, Colombia, Peru, they're going to grow at pretty consistent rates around or below 2%. Where we do see more upside, for instance, is Chile, that is experiencing a recession this year, but next year we'll see 2.2% growth. So that's going to help bolster a little bit of activity there. And then, of course, the outlier on the negative side, which is Argentina, that's entering a prolonged recession, right? We're expecting contractions this year and next year. So overall, it's certainly a mixed bag, but we do expect that regional growth will continue to tick along in a very similar pace than what we're seeing this year.
That's all very interesting, Mariana, super, super insightful. And I think what we hear from our clients, right, is that what they're facing is that there are big issues in the region, especially when it comes to the high inflation story. So is that something that you expect to continue impacting the growth in Latin America?
It is, but less so than what we saw this year. So what we see across most Latin markets, with the exception of Argentina, of course, which we're just going to put in another bucket for now because that's a whole different case study. But across most markets, we see inflation decelerating, right? A little bit stickier in Colombia, having slowed more significantly in Brazil, but overall the trend is towards slowing, and that should persist throughout the first half of 2024 as well. We expect these markets to have inflation levels that return to a much more normal pace, that return to central bank targets next year. So while we may continue to see some price pressures in the first half of the year, overall, it's trending positively for inflation, and this factor will be less significant than it's been over the past couple of years. In addition to that, we see that credit costs are going to start to decline as well. We are seeing central banks sort of pause their cycle of monetary tightening, right? We're not seeing as many rate hikes as we were seeing in some cases, like Uruguay, we're seeing rate cuts, right? We don't expect these cuts across most LATAM markets to occur right now, but by Q4 2023 or Q1 2024, most of these markets will have begun cutting. So that's also going to be another factor that eases the economic outlook across LATAM a little bit as well.
Hi, my name is Krista Reganey, and I'm Marketing Director here at FrontierView. I'd like to thank you for watching a segment of this webinar. If you'd like access to the full video and our latest insights, data, and research, sign up for a free trial with us today. Simply scan the QR code on the screen.